Well, for more on Pandora's IPO, we're going to go now to Nick Einhorn. He's a senior analyst at Renaissance Capital. This is a firm, an IPO research and investment firm that focuses on technology as well as energy company. Nick was with us last week talking about the Fusion IO IPO, and he's joining us now live once again from Stamford, Connecticut. Welcome. Good to have you back on Fast Forward, Nick. You know what? I want to start out by getting a reaction to a quote from another analyst who was on Bloomberg West just last night. Richard Greenfield of BTIG says he's very skeptical of the IPO valuation for Pandora, and he says we're advising our institutional clients not to participate. We think this will be a really tough IPO to generate value when you have no profit over the course of the next couple years. So clearly a skeptic on the success of this IPO, but what do you think, Nick?
Yeah, well, I think it's a good point that the profitability of the company is not really established yet, but it is still a very high growth company. And they do have a large user base, 34 million active users, over 90 million registered. So I think over time, as they continue to scale revenue and especially increase the advertising, both on the internet and especially for mobile devices, which are actually 60% of listening hours, they have a lot of room to really grow their revenue and scale up the margins as they kind of lever the content costs they have.
Well, let's talk about the factors that make up the margins for Pandora. On the cost side, they pay a lot of money in royalties, right, for the content. How is that going to change going forward?
That's right. Well, right now it's about 50% of revenue on content costs, and that's basically a pay per performance fee. So it's directly varies with listener hours. But where they have room to improve on that is by selling more ads per listening time. Right now, on average, they have about 1 minute advertising per hour of listening time versus terrestrial radio, which is about a 13%. So they have a lot of room to really grow their ad load. And of course, they have to do it without alienating listeners who probably don't want more ads on the service. But if they can grow it without alienating the users, they should be able to improve the gross margin and correspondingly the net margin over time.
What are they going to do with the proceeds from this IPO?
Well, a significant portion are going to existing shareholders, either because they're selling shares in the IPO or through preferred stock dividends. But the extra cash should really, just help with working capital. They've really been operating pretty close to break even on a cash flow basis over the last few quarters. So they're not in urgent need of cash for anything, but they are, long-term looking at expanding internationally. In the nearer term, they've got some agreements with car manufacturers that they're trying to get the Pandora service into the actual car dashboard, which can obviously be a big source of growth. So the extra cash could certainly help with some of those initiatives.
Nick, and one last question. We just heard from Julie, Pandora increased both its target price for this offering as well as the size of the offering. You think this is going to be another LinkedIn?
I think it'll definitely be a hot deal, partly because it's a very well-known brand name. Obviously, everybody knows it. And it's also a fairly small deal size relative to kind of the high-profile nature of the company. So that kind of supply-demand initiative, there'll be a lot of demand, and because there's a limited supply of shares, it could easily push the trading price higher in early trading.
All right, Nick, always appreciate your insight. We shall see tomorrow morning where this opens up for trading. Thanks so much. That was Nick Einhorn of Renaissance Capital with his thoughts on Pandora's IPO, expected to come after the closing bell today.